Hi everyone, and welcome back to the Elevator Pitch podcast. It's been a while since the last episode, my apologies, but Easter holidays and the Q1 result kept me pretty busy. As usual, the podcast is based off my longer form write-ups that you can find on Substack at elevatorpitch.substack.com. For new listeners, I have about 10 years of experience in public investing, and I use this podcast and the Substack to share some of the below radar companies I look at for my personal portfolio and kind of keep track of my ideas. Today's company is a favorite of mine. It has three things I really like. First, it's very well placed to benefit from a secular tailwind in its industry. Second, it is a leader within its space with a clear number one position and visible moat and some consolidation trend. And finally, it is an asset-light business with very nice returns on capital. That company is Planet Fitness. It's a $8 billion market cap with about 100% free float, and it's probably the most known gym brand in the US. And I think it's actually the most known brand looking at some of the surveys the company has put out. Now, the structural tailwind I'm mentioning is, of course, the healthy aging in most developed countries, and first and foremost the US. US population is not really expected to increase, but the median age is going up. People are getting older, the family size are getting smaller, and as a result, with the increase in disposable income, people are spending a lot more on themselves, which is kind of also working in tandem with another trend, which is simply social media making everyone a lot more aware of what they look like. And, let's blame also HD cameras where you can see every pore of your skin on any Instagram pic. And that's kind of a very strong trend toward more wellness, being in shape at every age. A lot of influencers on social media are getting a lot of views. And, that's something we also discussed during the Evolus episode. People are a lot more aware of themselves and what they look like in a way. And finally, the last trend which is helping Planet Fitness is GLP-1. Now, I didn't really dive too much into it in the paper. Didn't want to make it too long. But GLP-1, those the weight loss drugs, it's really interesting for gyms, right? Because the first thing is, of course, people who take the drug, they lose a lot of weight, but they also lose a lot of muscle very quickly. And every person who is under a GLP-1 drug, usually they get the advice and a strong recommendation from their physician to go to the gym, make sure that you don't lose too much muscle, because of course it has very bad consequences. And the second thing is, of course, in the US in particular, there's about 40% of the adult population which is obese, and they may not be able to go to the gym physically to be able to run, or they may feel very self-aware. As those people kind of get into GLP-1 drugs, lose the weight, they are finally able to go to the gym, right? And honestly, linking it to the above trend of just increased awareness of well-being, I think that's going to be an important tailwind for the next 10, 20 years, actually. So long-term structural tailwind, I think, is really behind people going more to the gym and more people, entering into the gym space, right? Because there's about 24% of the US population, adult population, which go to the gym, so 70 million people basically, and I think that's going to continue to increase, not so much because population is increasing, but because those trends I just mentioned. Speaking of member, Planet Fitness has grown from about 6 million members 10 years ago in 2014 to almost 20 million members in 2024. So that's about 30% market share of the total gym members in the US, and it has done so with a really simple business. Now, Planet Fitness gyms are very recognizable. They are very basic. You will mainly find a lot of cardio equipment. Also, they are bringing a lot more strength now, but simple equipment, very well maintained, very clean. It's what they call the judgment-free zone. So ideally, they want to target as large a population as possible. They want people to feel that they can go as beginners, even if they don't have a perfect body. They don't have, the big weight. They really discourage people from grunting. They had this funny lunk alert at the time, which if you are, doing a bit too much, you will get a little alert in the gym. I think at some point they had pizza to offer people once a week. So they really wanted to make like a fun environment to train and get better, which I honestly feel is a great mission because gym can be very intimidating. Uh, the offering is as well quite accessible because the basic card was $10 a month until last year. Now it's $15 a month, which is still probably the cheapest gym membership you can get, especially given the quality of the gym. And so that's a white card based offering, gives you one gym, you can go whenever you want. And then there's a black card, which is a bit more expensive. So at the moment it's $25 a month, and it allows you to go to any of the Planet Fitness in the US, so 2,500 basically. And you can also bring a friend with you. So if you have a friend you're always training with, you could actually split it, and then you only pay $7 a month each. But you do have to go together. So both those offerings are well below anything else there is in the market. And so you get this combination of high value gym, low price, right? So high value, very good, well maintained. You get everything you need, but at the same time, it's a low price because you don't pay too much. And that's actually an entire category of gym. Your Planet Fitness or Crunch, for example, will be in the same category. Now, gyms are a great business model because, of course, it's an annual subscription. It has a yearly automatic renewal, and you pay a yearly renewal fee. And where Planet Fitness was pretty smart is instead of asking people to pay with a credit card, they have people subscribe and get the automatic clearing house process, which is basically a direct debit on their account, which doesn't really expire in a way. So as long as the automatic clearing house process is in place, you get taken the money every month, and then when it continues. So there's no issue such as credit card getting to the end of its life, and then you would have to send updated information, etc. So they're making it a bit more painful at the start, but then it's actually making it very seamless for the members, because then it never really extinguishes. Now, in a way, I think what most people will criticize about that business model is like, people subscribe in January and then they never go. And then it's very hard to cancel. And I think there's actually been a few short reports that, Planet Fitness was basically just a huge scam where people could never really cancel. And the growth of the business was fake because people never really went into the gyms. I did a bit of research on that. It's not really true. I could not find any gym where there's people who not come, and I talked with a few gym owners. What they would say is, given the low price, some people would have the gym membership, and maybe they will not come every day, right? If you're like, I don't know, a young parent, for example, you may still want to exercise, but you cannot go often. And then this is honestly still very cheap. So maybe you don't go every week or every month, but every 2 months, right? And then, yes, you may not be able to go as much as people who pay $100 a month to go to more fancy gym, but it's honestly, it has a place, right? And anyway, we're going to see a bit more, but since the start of 2025, the click to cancel rule has been put into place. So basically, you have to be able to cancel the membership in the US the way you took it. So if you've been subscribing to Planet Fitness through their website, you need to be able to click to cancel, basically. And I think so far, based on the Q4 and the Q1 call, it doesn't seem it has made a huge difference. So I would say probably there are some people who would like to cancel and have not found the time, but it seems to still be in the minority. And finally, a last point on the cancel rate and the actual low member churn that the company talks about. There's an interesting phenomenon because the price you subscribe at is fixed. So let's say you subscribe when the white card was at $10 a month. As long as you keep your subscription, you're going to be paying $10 a month. Now, if you were to cancel the subscription, and then let's say in 1 year or 2 years you need to take it again, then you're going to be on the $15 subscription, which is, pretty big increase. So I think for a lot of people, If you have an older subscription which is less expensive, then you do have a vested interest to maybe you keep it even though it's maybe a time in your life where you don't go so often, but then once you go back, it's worth it maybe because you're saving several dollars every month actually. Now, on the operator side, right, because Planet Fitness is a franchise business, so they don't own the gyms, they are owned by financial investors or operators. And for them, it's a great business. There's no shortage of people who want to own gyms, according to Planet Fitness, because the truth is you can make an extremely good margin. So the margin you can get on a mature Planet Fitness gym is about 35 to 40%, and that's after the 7% royalty fee. And if you compare that to, let's say, a restaurant, so if you think of, a Cava, for example, which is, it's still quite premium. So Cava or Chipotle, they make 25% operating margin. So 35 to 40% is way above that. And then if you wanted to compare to hotels, right, which have a higher margin, so even a Hyatt Place will be a 43% operating margin. So very close. But to open a Hyatt Place, you need tens of millions of dollars. While, of course, to open a Planet Fitness or a Cava, you need single digits $1 million. So let's call it 2 to 3 million. So in terms of returns on investment, it's a really nice proposition here, especially given what we just said, the stickiness of the member revenue, because once people subscribe, they have a kind of a year-long commitment where you have visibility on the revenue coming into the business. Planet Fitness has also been careful not to have any operator having more than, representing more than 10% of revenues. They have a well-diversified group of operators. And the way it works is the contract is basically a 12 years franchise agreement with a fixed royalty and then some obligatory re-equipment every few years, and you can renew at the end of the 12 years. Now, Planet Fitness makes money from the franchise we just discussed. So about 55% of the EBITDA is coming from the franchisee, which represent 90% of the stores. And it's a 7% royalty fee, basically. There's another 35% of EBITDA, which is from corporate-owned gym. So Planet Fitness owns the gym. They have about 10% of the existing gym in, special areas or because they are transitioning the owners. And finally, 10% of EBITDA is equipment. Now, equipment is very interesting. And, if you follow the Domino's Pizza, for example, they have the supply chain, for example, right? Equipment is a bit the same. Equipment is Planet Fitness by all that, big purple equipment, which is so important to the corporate identity, because every Planet Fitness gym has the same machines. They all work the same way. They all look the same. It's very easy if you've been to one to be comfortable in another one. So Planet Fitness buy all of that in bulk from two suppliers, basically, and they get very good rates, of course, because they buy a ton of them, and they give or they resell them to the franchisee with a little bit of a margin, so about 10 to 12%, which is not a lot, but it's still helpful, let's say. Equipment has a lot of visibility because, of course, every time you open a gym, in advance, when the gym is going to be equipping itself for the first time, but also, as I mentioned above, the contract is asking every franchisee to re-equip every 5, 6, 7 years for the cardio equipment, and I think it's 6, 7, 8 years for the strength equipment, which means you have another kind of additional recurring high visibility revenue coming to Planet Fitness once the gym is open. And finally, I think what's really important and maybe overlooked a bit about the equipment is it's really a big part of the reason people renew. It creates a bit of stickiness here because let's say you are running a gym, you have members, you're happy, but you don't really want to pay anymore the 7% fee to Planet Fitness. So at the end of the contract, the 12 years, you could say, hey, no, thanks, I want to do it on my own. But then you would have to send back all of the equipment. And that's a pretty big cost, actually. So by having the equipment completely branded and basically, independent gym could not use them, Planet Fitness is really also creating a bit of a hurdle for people who would want to get out of being a franchisee for Planet Fitness. Now, hopefully that's a bit clear for, what Planet Fitness is doing, right? The gyms and the equipment and the stickiness of revenue from members. So let's focus a bit on the growth, right? So, this is it's a very successful company. It is dominant. So, is there any growth left in this one? And yes, actually. So the first thing is, of course, it is the largest gym in the HVLP segment, or the second largest gym in the US. They have 2,500 gyms in the US, and they believe they can go to 5,000. And I think it's probably one of the points where when I discuss the stock with people, they're like, yeah, 5,000 seems a lot. But if you put it in perspective, right, there's about 13,000 McDonald's in the US. There's about 18,000 Starbucks. I think Domino's has 7,000 locations. Subway have like 20,000. So 5,000 gyms doesn't seem so bad in a way. It doesn't seem so difficult to reach. And there's actually a very detailed chart of where Planet Fitness believes they can grow without starting to cannibalizing their existing stores. There's actually already 900 additional gyms which are under contract from the area development agreements they have. So 5,000 doesn't seem so big, honestly, to me. I think that's very reasonable given what they are offering. And then the second part of the equation, of course, one is the unit growth, and the second part is the same-store sales growth, right? So getting more people into the gym, as well as for those new members to pay more. So what's interesting is for the members, the churn of the member is low, but every time you lose a member who was paying a low subscription for a member who is paying a subscription with a new price, you actually get the full pricing. So if you had someone who was paying whatever $7 or $10 that leave Planet Fitness, and then you bring in the new members at $15, it's a 50% mix effect if you want. And then on top of that, you get people, upgrading from the white card to the black card, right? And initially, the black card used to be 60% of members pre-COVID, and now it's at 64%. Planet Fitness is definitely making sure the value of the black card is very interesting, and that from $15 to the current $25 you pay for the black card, the difference, especially if you bring a friend to the gym, you could easily kind of try to upgrade people. And finally, the last part of the kind of the price mix for the growth in the UX is the royalty upgrade. So when Planet Fitness started 20 years ago, they could not really ask for a 7% royalty rate. So a lot of the initial contracts were made on increasingly higher royalty rate, but it was about 4% in the 2010 basically, and today it's 7%, right? So not quite double, but basically because the royalty rate is fixed for the duration of the franchise agreement, every time a franchisee renew is upgraded to the new royalty rate, right? So let's say you had a franchisee who opened his first Planet Fitness gym in 2015 and maybe was paying 5 or 4% royalty rate. If when it's going to be renewing in 2025, all of a sudden it's going to be paying 7% royalty rate. So it's a big improvement. And I have a calculation in the Substack write-up if you want to have a look. Basically, for Planet Fitness, it could be an easy, quote unquote, let's say, 12 to 15% revenue upgrade just going through that royalty upgrade phenomenon, because there's basically only 50% of the current franchisee who are on the current 7% royalty rate. So in the US, the growth is really going to be opening new units and getting that same-store sales growth, both from more members upgrading to the black card, and the royalty upgrade. And the other part of the growth, of course, is international. So historically, Planet Fitness has a few hundreds of gyms in Canada, Australia, Mexico, and Panama, I think, which the say was, they were open mainly because there was a franchise in the US who also had some businesses in those countries and really wanted to bring the concept of Planet Fitness into those areas. So very interesting kind of organic growth there. But the way Planet Fitness has decided to go a bit bigger on international, it's by opening in Spain. So Europe is a lot less penetrated for gyms, a lot less people go to gym. And there's a lot of reason for it. Part of it cultural, part of it the price, part of it the convenience of it. But the truth is, in Spain, for example, only I think it's 14% of adults go to a gym, right? So the idea is that you have this gap between that 14% in Spain versus 24% in the US, and maybe Spain doesn't go to 24%, but it could go somewhere in the middle. So quite a growth market if you have the right offering. And Planet Fitness believe the high value, low price they can offer is something that doesn't really exist. And it's true that when they launched the 15 euro per month subscription in Spain, it is the lowest in Spain. So in Madrid, there was nothing cheaper for such a quality of gym. And so at the moment, Planet Fitness, they have about 7 gyms and they have the target to open 8. So they used their own capex, which is also why ROIC was a bit lower last year. But they're currently working with already someone who will take it over and make it a franchise and then make a national rollout. And then from there, France, Italy are also very interesting markets. It's again, it's an underpenetrated market. There's enough space for them and for Basic Fit. So Basic Fit is the large European gym operator. It's 3 times bigger than the second largest one in Europe. They have about 1,500 gyms, mainly in France. So they have 800 clubs in France, but it also have 200 clubs in Spain. It's I think it's interesting. It's way cheaper than Planet Fitness for sure. So you can buy Basic Fit. It's a 1.6 billion market cap and it's trading on 6 times EV/EBITDA next 12 months. So compares very well versus Planet Fitness, which is at 18, 19 times EV/EBITDA next 12 months. Now, what I don't find as attractive in Basic Fit, despite a very interesting end market, it's mainly the fact that they are owner of clubs, right? They are asset heavy. They buy the clubs, they put all of the capex up front, they buy the properties, and that's a very different business model. It's a bit slower because you have to come up with the cash before you can open. You have all of the expenses on your P&L. Now, of course, if you can reach very high margin, it's great. And, Basic Fit has margins similar to Planet Fitness, but it makes you a lot more sensitive to interest rate, to cyclicality. If there's a bit of weakness in membership, well, you still have to shoulder the cost entirely. So I find it less interesting. I much rather have Planet Fitness, which is asset light, and in that sense is a lot more resilient as a business. And that's kind of it for the growth driver. So the US, is growth through new units, royalty upgrade, and then getting the members to upgrade to the Black Card. And then in international, it's starting to work well with Spain. And ideally, I think we will see more countries coming in the future. Now, I want to spend a few minutes on management because it's been one of the reasons the stock was very attractive and you could have bought it at a very good valuation last year. Now, Chris Rondo used to be the CEO. He was very public figure, let's call it, very well known. He had been at the company for 20 years. He started as a receptionist and he moved up through the ranks. So a very impressive personality. He was pushed out by the board at the end of 2023. It's not really clear why. I think at the end of the day, what I gathered is mainly that he was always pushing back on the $10 a month. He really wanted to keep it. And for the franchisee, at some point, it wasn't working anymore from a margin perspective. They do needed a little bit of pricing, so it may have been one of the reasons. I've also heard that the culture at the company wasn't so great under him. So I'm not so sure what happened. But anyway, he got pushed out. The stock went down quite a bit. Especially because they didn't have a CEO yet. So it took them 6 months to find Colin Keating, who was hotel executive, and which has then taken the reign. And then in the middle of all of that, there was a PR scandal. So in February 2024, in Alaska, there's a trans person who was changing in the room, and then another member took a picture of it to kind of make a political statement, and that kind of created a bit of a PR scandal, which, there was boycotts, and Planet Fitness gym were receiving bomb threats. It was a bit of a nightmare, which really impacted at the time the joins. So people were canceling and people were a bit afraid to join. So all of that, I think, in the past. And if you think of it, it's actually quite nice. Like for Q1, that was easy. For Q1 and Q2, sorry, it's going to be easy comps because it was a pretty difficult period last year. So yeah, new CEO, Colin Keating. I've been lucky enough to meet her. She's a very smart lady, very solid. She's done a lot of work. The moment she started, she went to meet all of the franchisees, make sure she got the business right. And so far, I've heard her on 2 calls. It seems quite rational, very driven what she's doing. She's also bringing a bit more external talents into the company. So the new CFO, there's a new Chief Development Officer. So to a certain extent, it's a bit maybe also of a company who was a bit sleepy, living off the royalty, and it seems Colin is going to be a bit more active in developing the company. So I'm looking forward to that. On the financial side, Planet Fitness has a great track record. They've grown same store or same club sales, I should say, at 9% per annum outside of the COVID years, and the units, they grew from 0 to 2,700 globally. Margin has been scaling up, of course, because it's a asset light business. So they really, every incremental member is basically 100% margin for them, which has, driven EPS growth of 20% per annum over the last 9 years. It has also delivered very nice ROIC. So ROIC peaked at 25% in 2019. Then you got COVID. There was an acquisition of a large franchisee they wanted to get rid of. And then the Spanish expansion, so it went down a bit to 10%, and it's climbing back. So in 2024, it was 14%, 1.4, and I think it's just going to go back up and continue to grow with the business. In terms of my personal vision, so I model it quite conservatively. I give them to 160 to 180 new gyms every year, and then basically revenue growth high single digits, with same store sales completing the difference between kind of 5% unit growth and then let's call it 3 to 4% same club sales growth, and that gives you this high single digit growth. I think it could be a bit faster, depends a bit how the unit growth goes, and then kind of also the black card in the mix can really influence, as well as the equipment, right? Because for example, right now they are doing a bit of increase of the strength equipment, so a lot of the Planet Fitness gym are re-equipping a bit earlier because there's a bit of demand for more strength equipment. Margin wise, I think it continues climbing just because they make 70+% margin on the franchisee, about 35-40% on the corporate, and then 20% on the equipment. So they could, potentially, if everything was mature and every club was ramped up, they will make about 49-50% margin on the business, and they are closer to 43%. So I think it's going to continue expanding. I think by 2028, I have them at 45%. So still a bit of margin to kind of what would be the ceiling in what I just said. But all in all, I can without pushing too much or being too aggressive, I can get it to EPS CAGR of 14.5%, 2025, 2028, which I personally find very attractive given if you think of the stickiness of the business and the asset light element. And I mean, if we move a bit in terms of the strength of the business in terms of the valuation, right? Because valuation is demanding, right? It's 19 times EBITDA NTM or 28 times PE NTM. It's quite expensive, but it is a very unique business. There's no tariff impact. It's the cheapest option around. So if people are going to be having some issues and they have to trade down in terms of gyms, so maybe they will stop paying to go to the Lifetime or the Equinox gym, and they have to go down, and then Planet Fitness is a bit of the obvious choice here. And it is a quality company, right? It's well managed. They are careful with money. They have not too much debt. I would like them to decrease the debt, but I think there's enough cash that they can do that a bit progressively. So I think here you have to decide a little bit. I think it's a bit. I don't want to call it a safe choice because people could also just cancel, and if we go into recession, it's going to suffer. But to a certain extent, if we mainly see weakness on the consumer, I think it's gonna hold a bit better. There's no risk of tariff, and then I think the international expansion is not in the price. So put whatever multiple you want on that, and then you could actually find that the valuation is attractive. So in conclusion, I really think Planet Fitness is a very interesting company here. For sure, the returns may not be the biggest in the industry, but I think there's a bit of defensiveness here. There's a bit of uniqueness, a lot of to like despite the valuation. So clearly one I'm following quite closely. So thanks a lot for tuning in. And as usual, the podcast thrives on your engagement. Please send me any question you have, feedback you have. I have a new mic, so I hope this is improving the quality, so you may hear my French accent even better. But yeah, I'd love to hear your thoughts on the episode so far, and whether this is valuable to you or not, and if there's anything else you want to hear about. You can connect with me on any social media. You can drop me an email at theelevatorpitch@outlook.com, and your feedback is the key to future episodes. Don't forget to subscribe wherever you get your podcast, and visit elevatorpitch.substack.com if you want the in-depth analysis. Thanks a lot for listening, and have a great day.